Well, another night of unusual trading in the US where share market indices diverged yet again. What do we mean by that? Well, the Dow Jones Industrial Average Index was up by almost 0.5% in trading overnight, a modest gain but a good one. However, the S&P 500 index was flat and the Nasdaq 100 index fell. And the differences in the performance of these indices is very significant. People who study these sorts of things would know that, generally speaking, those US indices move in close to lockstep. They go up together and they fall together. And the fact that they didn't do that overnight is pointing to the current drivers of the market. When we drill into it, we see, for example, in the S&P 500, 400 of the stocks actually rose in trading overnight, but it was pressure on those high-flying major market cap tech stocks that dragged the index down to a flat performance. And to give you some idea, let's have a look at the tech-heavy Nasdaq index. As you can see from this chart, it has maintained its uptrend, but it did slip in overnight trading. And this is a daily chart. Each one of those candles represents 1 day's trading. And another thing to note about it, beyond the fact that we are in a clear uptrend, is that the daily ranges are compressing. The buyers are meeting the sellers, and the daily trading range is smaller than it has been. It does suggest there's a bit of an arm wrestle going on in tech stocks, and whether buyers or sellers will win is hard to say at this stage. We do have an uptrend in place, but as you can see, it's quite a gentle trend, and will only take a couple of days of selling to break that trend and shift the risks in the Nasdaq 100 from the upside to the downside. So something to watch out for. That pressure showed up in stocks like Nvidia. Its shares were down 2.5% on talk that the White House might be considering some measures to restrict AI chips, and particularly AI chip imports. Microsoft fell to the general negative sentiment for the tech sector. Its shares were down 1%. And we've got Alphabet and Tesla reporting tonight or tomorrow morning, our time. It's interesting to note that both of those shares rose again overnight in the lead up to the result, and we're on alert for a buy the rumour, sell the fact reaction in the share market once their reports are available. But in other sectors of the market, there were some stellar performances. This chart shows Agnico Eagle, one of the major gold producers in the US, and you can see when I click forward to the chart that it blipped to a high for the year in trading overnight. Now, that was on the back of a weaker US dollar that saw gold prices rising. Agnico Eagle up 5% to the high for the year, but that general lift in gold prices was evident in majors like Newmont up 3% and Barrick up 2%. And we could well see good support for gold stocks in trading in the Australian share market today on the back of that strong performance from the sector. We've also got some pressure on Coca-Cola. Its shares dipped despite talk that the US president had given strategic advice to the executives there. Philip Morris fell 8.5% despite reporting above analyst consensus. And the reason appeared to be a weaker or a cautious outlook statement, and does show that at the moment investors can be unforgiving. And a number of stocks have reported a good quarter, but a cautious outlook, and have been punished for that. And Lockheed, a great example, one of the worst performers overnight. Its shares were down 11% after reporting. And it does appear that the exuberance for defence stocks might be wearing out based on that performance. We're likely to see gains in the Australian share market today. The futures market is up around 40 points in overnight trading, so we should see a lift at the open. However, big banks were under pressure again for the second day in a row yesterday. CBA were down another 3%, and general selling in the sector does appear to be related to the upcoming reporting season and the fact that we have some real questions around valuations for the major Australian banks. And in contrast, we saw very good support for major miners. The turnaround in thinking in steel, and in particular the idea that China might once again turn towards major infrastructure projects to keep its economy bubbling along, has lifted steel, iron ore and coal stocks generally, and BHP and Rio both major beneficiaries. Yesterday, BHP up more than 2.5%, Rio up more than 3%. It does look like a rotation that we flagged at the beginning of the year might still be playing out. That is that major institutional investors are selling down their bank holdings and using the proceeds to buy into the global mining stocks.